The American economy has always been a roller coaster of ups and downs, but lately, there are concerning signs that everyday Americans are approaching a financial breaking point. Today, we're going to explore 20 clear indicators that suggest many Americans are on the verge of financial collapse and what this means for our economy as a whole. Let's start with credit card debt, which has reached an unprecedented $13 trillion. Americans are increasingly using their credit cards not for luxuries or discretionary spending, but for basic necessities like groceries and utilities. This shift in credit card usage is our first major red flag. When people start charging their everyday expenses, it's a clear sign they're running out of liquid cash. The second indicator is the alarming rise in auto loan delinquencies. More Americans are falling behind on their car payments than at any point since the 2008 financial crisis. What's particularly concerning is that these aren't just luxury vehicles. We're talking about basic transportation that people need to get to work. When people can't afford to keep their means of transportation, it's a serious warning sign. Third, we're seeing a surge in buy now, pay later services for everyday items. While these services were initially popular for big-ticket purchases, people are now using them for basic necessities like groceries and gas. This trend suggests that Americans are struggling to make it from paycheck to paycheck, even for life's most basic needs. The fourth sign is the increasing number of Americans taking hardship withdrawals from their 401ks. These early withdrawals come with significant penalties, showing that people are willing to sacrifice their future financial security to meet current needs. According to recent data, hardship withdrawals increased by 24% in 2023 compared to the previous year. Fifth, we're witnessing a rise in second and third jobs among middle-class Americans. The side hustle culture isn't just about extra spending money anymore. It's becoming a necessity for survival. When working professionals need multiple jobs just to maintain their standard of living, it's a clear indication of financial strain. The sixth indicator is the growing number of Americans who are behind on their utility payments. Energy companies across the country are reporting increased delinquency rates, with some areas seeing double the normal number of households struggling to keep their lights on. Seventh, we're seeing a significant increase in payday loan usage. These high-interest loans are typically a last resort for people who have exhausted all other options. The fact that payday loan centers are reporting increased business, especially among middle-class borrowers, is deeply troubling. The eighth sign is the rising number of Americans who are food insecure. Food banks across the country are reporting unprecedented demand, not just from traditionally vulnerable populations, but from middle-class families who previously never needed such assistance. Ninth, there's been a dramatic increase in rental evictions. Despite various protective measures put in place during the pandemic, eviction rates are now surpassing pre-pandemic levels, indicating that many Americans can no longer afford basic housing costs. The 10th indicator is the declining savings rate. The average American savings account has been steadily shrinking, with many reporting they have less than $400 in emergency savings. This lack of financial buffer leaves people extremely vulnerable to any unexpected expenses. The 11th sign is the increasing number of Americans who are postponing medical care due to cost. When people start skipping necessary medical treatments or prescriptions because they can't afford them, it's a clear indication of financial distress. 12th, we're seeing a rise in personal bankruptcy filings. After a lull during the pandemic, bankruptcy courts are now processing more cases, with many involving middle-class families who previously had stable finances. The 13th indicator is the growing number of Americans who are behind on their student loan payments. With the resumption of student loan payments after the pandemic pause, many borrowers are finding themselves unable to meet these obligations. 14th, there's been a significant increase in the number of Americans canceling their insurance policies to save money. This includes life insurance, health insurance, and other protective coverage, leaving them vulnerable to catastrophic events. The 15th sign is the rising number of Americans who are selling personal items online or through pawn shops. While the second-hand market has always existed, we're seeing more people selling necessary items just to make ends meet. 16th, there's been a noticeable increase in multi-generational households. More adult children are moving back in with parents, or elderly parents are moving in with their children, often due to financial necessity rather than choice. The 17th indicator is the growing number of Americans who are cutting back on essential services like internet or phone plans. In our digital age, these aren't luxuries, but necessities for work and education, yet people are being forced to make difficult choices. 18th, we're seeing a rise in predatory lending practices targeting middle-class Americans. The increase in these high-interest loans suggests that traditional lending options are becoming less accessible to average Americans. The 19th sign is the growing number of Americans who are falling behind on their mortgage payments. While not yet at crisis levels, the trend is concerning, especially given the current high interest rate environment. Finally, the 20th indicator is the increasing number of Americans who are delaying major life decisions like marriage, having children, or buying a home due to financial constraints. When people start putting their lives on hold because of money, it's a clear sign of systemic financial stress. These 20 signs paint a concerning picture of the financial health of everyday Americans. While any one of these indicators alone might not be cause for alarm, the combination of all 20 suggests we're approaching a critical tipping point. The question isn't just whether individuals will break financially, but what impact this will have on our broader economy and society. The solution isn't simple, but understanding these warning signs is the first step toward addressing the problem. Whether through policy changes, financial education, or economic reforms, action needs to be taken before these warning signs turn into a full-blown crisis. The financial health of everyday Americans isn't just about individual well-being, it's about the stability and future of our entire economy.